Okay, so good morning. So we have a number of things to do today. Okay, the first thing I wanted to thank you for the feedback you gave on the course. I looked at it, I received it. I mean, it's quite good, but there are still things for improvement, of course. You know, somebody noticed that I'm not very good in OLAT, which but there are also other useful feedback to think about. So very useful. Also, for me, being a bit an outsider from the university, I also, a little bit to see how things are done in this particular university. I mean, of course, I've been here for 10 years now, which I should know, but still, it's a bit harder as an outsider to understand the level also and so on. So very useful feedback. Okay, the second point. So my plan would be the following. So we can try to go through the remaining slides. So today's lecture and a couple of leftovers that we had. And at the end, I can tell you a little bit about the exam, which is on the 20th. And then we can keep the next week's lecture as optional. So we could say, more as a Q&A setting. So if you want it, we can have it as a Q&A. But if you don't have time, you don't want, we can also skip it. So that would be the main plan. Would you agree with that, or would you prefer to add the lecture also next week? I mean, also in the Q&A, or let's see if we get to the end today of what I plan to do. Yeah. Okay. So one first point that has remained a bit pending is this. Okay. It's not really here. No. Okay. Okay. Shall I maybe close a bit? Okay, here, so I reread the Abade-Brunner-Meyer paper. So the issue is, basically the paper is about the following issue. So what are the incentives of those who run a ledger, so a ledger of transactions? So what they're basically saying is, if you have a centralized ledger, so there is a custodian, so not a decentralized but a centralized model, then this custodian extracts rents from this, from being the custodian of the network. So it gets fees or extracts some type of rent, also in the future, also in expectation. So the incentive of this of the custodian of the ledger is to keep transactions valid. So it has an incentive to be truthful because by continuing to be the custodian of the ledger, it extracts rents also in the future. So not only from current transactions, but also for future transactions. If you have a blockchain, and the blockchain is restricted, so say a blockchain among 20, 30 players, institutions or people. Then again, this is oligopolistic, and those who actually verify the transaction or also participate in this blockchain can also extract some rents, and they for this reason they also have an incentive to avoid basically double spend, so avoid basically falsifying the transactions. Okay, so it's always a question, expected rents in the future. So you want to be truthful. This buys you rents in the future, because basically the idea is that if you're not truthful, then people pay from that ledger, from that blockchain, and you lose the future experience. Okay, the problem is the reason why the proof of work is needed and is also wasteful is that you don't have this mechanism in a completely open blockchain. So in an open blockchain, when there is competition and entry is free, everybody can buy transactions. So there is no incentive, in a sense, to verify transactions, because whatever you don't. So if you do your job properly by verifying true transactions or not, irrespective of that, you will not gain rents in expectations, because there are no rents in a perfectly competitive system where there is free entry. So to avoid that, the original Bitcoin blockchain has this complicated proof of work mechanism. So you need something that is costly, because otherwise, with completely free entry and costless verification, you could have thousands of alternative histories being written. Okay, so you can fork out. So you have different forks of the blockchain going all kinds of directions, and there is nothing that disciplines these different forks. So this is what Abadi and Brunmeier basically say. So, but I mean, yeah. So you are invited to read the original paper. There are also a couple of presentations on the paper on YouTube if you're interested as well. But that's a bit the gist of what they say. Yeah. So the proof of work was basically created to avoid that is easy to write alternative histories of the ledger, and that there is no incentive in terms of expected profits to avoid that, which is a challenge in completely decentralized networks. Any questions on this? Okay, this is what remained. Another thing that remained is this. Okay, this lecture we are not completely finished. I think we were in the middle of this slide. So we were discussing about CBDC, so central bank digital currency, and bank intermediation. So we say that compare with other digital currencies, so compare with stablecoins or crypto, CBDC is particularly dangerous for banks in a sense. I mean, inverted commas, because it's so safe. It's a liability of the central bank. Being so safe, some people say opens a highway towards bank runs. We were discussing what bank runs are. Can somebody tell me what a bank run is? And why it's wasteful? Why is a bank run a problem? Yeah.
Well, basically, people want to transform their money into physical cash, and because the bank doesn't have all of that money as reserves or as that money, they would basically go bankrupt, and then all other banks could also become bankrupt because they're interrelated, because they borrow money from each other as well.
Yeah. No, it's exactly that. I mean, I would add to that so if the bank has to quickly reduce its balance sheet, I mean, basically deposits go down, so he has to reduce the balance sheet. The assets of the bank are illiquid, or they also finance illiquid projects. So I think we had already discussed that if a bank is lending to a builder, somebody who is building a skyscraper, and then it has to withdraw the loan midway, then you have a half-built skyscraper, which is worth basically nothing. So that's why it's wasteful to liquidate illiquid assets midway, because then you have a half-built skyscraper, half-built house, or things like that. That's why a bank run is dangerous and costly, because basically the banks have to shrink the balance sheet and deleverage very quickly. So, and there is a famous model by Diamond and Dybvig, which kind of states this formally. So how this bank runs. Basically, the bank runs is also in Dynamo Dybvig is also a self-fulfilling mechanism. So because people believe that there will be a run, then the run happens and it's costly. So it's all based on beliefs. Okay, there is no particular reason why they happen. It's just if the belief arrives, that the belief becomes self-fulfilling. So it kind of realizes itself. Okay. The digital world is easy to do. I mean, at least in a traditional bank run, you have to physically go to the bank and get convert your deposit into cash. But in a digital world where you can do it with your mobile phone, it's easier. Okay. So CBDC has no storage cost. Okay. So if you have a 1 million euros of deposits and you want to convert into cash, then you have to have a big pile of cash, and you don't know where to put it. But with CBDC, has no storage cost. So yeah, so it's easier to do. So risk of runs is higher, but at the same time, the central bank has also more control over it. So what the central bank can do, there is a run towards CBDC. The central bank has a lot of tools to avoid it. So what could it do? It could put limits on CBDC. So you could say, and this is easy to do digitally. So you could say, every citizen can convert only a certain amount from deposit to CBDC. You can say, okay, now that we have a bank run, I remunerate the CBDC with a negative interest rate. So from now on, the CBDC interest rate is minus 5%. This will prevent a lot of runs. Or can also lend itself to banks. And it does it all the time. So this is the lender last resort function. So there are deposit outflows, banks lose deposits, shrinking, so reducing the balance sheet size is costly because it has to liquidate these illiquid assets on the asset side. So the central bank can simply lend to the banks. So the banks borrow less from citizens, they borrow more from the central bank. Okay, and this also prevents. So the risk of run is there, but is also more controllable. Any questions? Yeah.
Is the risk of a CBDC run higher than a normal bank run? A bank run physical cash?
Yeah, I would say so because in principle, yes, because digitally is easier. Because some people have said, suppose that in Greece 2015, when there was a bank run, this was could be done on a mobile phone, rather than going to the bank branch and so on. Because you always, there is a stickiness in deposits. You always have, people who have had their money in their bank for a lifetime, older people, but it doesn't run. Then it can go much quicker. So it's dangerous.
But if CBDC is backed by the central bank, then there would be it would be safe. So then there would be no digital runs, or would there still be digital runs because there's no trust in the system? Well,
there is a digital run from bank deposits to the CBDC. So I doubt about my bank. I doubt about the health of my bank. In Dynamo Dybvig, this is an interesting point. So in Dynamo Dybvig, everything happens in a self-fulfilling way. So somehow from the sky comes the belief that the bank is unsound and I want to convert my deposit into cash. This falls from the sky. And the simple fact that people believe that then leads automatically to the bankruptcy of the bank. Because basically by liquidating the deposits, you have to sell these assets, illiquid assets quickly. This is costly, so it reduces the profits of the bank and makes the bank bankrupt. So all is, what we observe in reality is more that there is always a bit of an element of weakness of the bank. So what we observe in most cases is that this kind of belief or run doesn't come out of the sky, but there is always some truthful reason for doubting So often is a case where the banks are kind of shaky or weak, and then depositors run and pile up on the problem. So in a sense, is a bit like when illnesses hit people who are already weak. So this kind of mechanism. So normally a run happens to a bank which is already in trouble or already has some doubts. But here we are speaking about conversion on deposits into cash. Yeah.
But they could also put that bank depot into CBDC.
Yeah, exactly.
Digital run.
Exactly. Digital run is basically I sell my deposits, I convert. So I doubt about my banks. I convert my bank deposit into CBDC.
Yeah. And there was a case, I think a couple slides before, where the bank would just be intermediate. Is that the same, or? The
bank would be intermediate.
Yeah.
Yeah, no, that's a bit of a different. So here we are speaking about a bit of a different issue. So here the issue is who distributes the CBDC. Mm-hmm. So where it appears. So if it is a two-tier scheme, and is basically distributed by the banks, it will look to you as a consumer like a bank deposits. I mean, it would be a different part. I mean, probably what you would have, I imagine, is you open your bank deposit, and there will be your normal deposit, and then separated will be a CBDC. So there will be a wallet with a CBDC, but this will be, you enter into your wallet through the banks. It's a separate issue. It's a different issue. Any other question on digital runs? Yeah.
There's a limit on CBDC.
Say again?
If there is a limit of what people can hold of CBDC, then that problem goes away, right? Exactly.
This is one of the main ways of preventing that is that. But of course, these also costs. Because for payments and so on is not. For example, now I come to Digital Euro. So in the Digital Euro project, so one of the most likely scenarios is that there will be a limit to holdings. But I as a consumer, I suspect it's going to be a bit of a nightmare, because then suppose that you have to pay a big amount. So I have experience. So my daughter studies in England, and 3 times a year I have to pay her university fees, which are huge. And so I have to make 3 big payments per year, and it's always a nightmare. And it's going to be a nightmare as well, also with the Digital Euro, because you have to make small payments, and so you have to divide the payment in pieces. So it's, but in principle, yes. I mean, the limit to holdings is a way to prevent that phenomenon, indeed. Yeah. Okay, so a couple of words on the Digital Euro. So we are in the investigation phase. So until October 2023, the ECB is investigating on the Digital Euro. The focus will be on retail payments. So this is very much the focus. Is not so it does not have to be. So will not be an investment asset, something you hold to make money, but it will be a retail payment. So this will be associated with limits and so on. So you will not be able to have 1 million euros in Digital Euro. It's not possible probably to have complete anonymity. So it will not be as anonymous as cash, as physical cash, but it will be possible, very likely, to have high level of privacy in small transactions. There was a survey with citizens. So before this phase was launched, there was a survey on Digital Euro, which was interesting. So one of the aspects which came up a lot with citizens is privacy. I mean, partly this was due to the fact that a lot of respondents to this survey were in Germany, and we know that in Germany privacy is held very, very highly, but certainly privacy is a big concern, and now there is also work on focus groups. So focus group is basically they put a group of people in a room, and they ask what do you think if we do the product like this, like that, and so on, like other firms do for products, or even for movies. No, they show the movies to a smaller group before they release the movie. So similar thing for Digital Euro. Probably there will be a distribution through supervised entities. So it will be a 2-tier system. So if you want to hold the Digital Euro, you will not interact directly with ECB. but there will be some intermediation with some supervised entity. Maybe initially will be banks, maybe will be open up to also other intermediaries later, I guess. And there is also this important cooperation with other policymakers, European Commission, European Council, and Parliament, European Parliament, on the framework legislation. So there is a big discussion on what kind of legislation is needed, both to introduce a digital euro, but also what kind of legislation is needed to have a digital euro. So think of money laundering and so on. Okay, so legislation is currently a big topic. Good. Does any question on digital euro? Would you be interested? I mean, would you hold it? I mean, what's your feeling? I mean, it's something you look forward to, or indifferent, or no view? No view, probably. No? You have to see it probably in practice. Okay, another interesting, of course, prominent CBDC. I mean, almost all countries are considered CBDC now. So China is probably the one that started first. So the eCNY. So digital renminbi, also called. So the project started in 2014. We already discussed that China is ahead of many economies in digital finance. So this would be because actually has already been partly introduced, the first digital currency issued by a major economy. There are CBDCs already issued by smaller jurisdictions, but China would be the biggest, the first large power to do that. So the Chinese CBDC will be issued by the People's Bank of China, and it is distributed through banks. So there is a network called eCNY network. But the data will be held at the PBOC. Okay, so the data storage, so the storage of transactions, there will be held by the PBOC. We know that there is a special scheme possible for tourists. So normally this will be a domestic use. So there will not be, for the time being, foreign use of the e-renminbi, but there will be schemes possible for tourists. Yeah. Has anybody been in China recently or used this? Because it's already used. Yeah. So privacy concerns are significant. I mean, as everything else in China. But it's also the purpose of this is also to control financial transactions. So it is also an explicit objective of this project is to have more surveillance of financial transactions, because the digital finance in China is a bit of a far west situation to some extent. So I think the government also wants to keep more control over transactions. It was rolled out to the Olympic Games. Yeah. And as I said, there is a focus on domestic use and retail. Yeah. So these are the references. I mean, the book by Dirk Niepelt who is a great expert on CBDC, is very useful. It's quite short, so if you want to go a bit deeper, I recommend that book. Yeah. And this is the last paper is more like a critical paper, which is, mostly about the idea that that bank stability is at risk with the CBDC, the issue of digital runs and so on. Yeah. Okay. Any remaining questions, CBDC? Okay. Okay, let's do then today's lecture then, which is number 10. Okay, so here these are a bit sort of high-level considerations on the future of money. So, okay, so we had to start with you remember in the first lecture we described the so-called great moderation equilibrium. So the fact that inflation has been low and stable since the mid-80s. We discussed it was even better than the gold standard. So some politicians want to go back to the gold standard, but we know that inflation is actually better now than it was in the gold standard. So we have had stable inflation and growth. And generally there was a high trust in central banks by citizens. So when you ask citizens, do you trust different authorities, normally the central bank scores quite high, at least higher than the government. I mean, maybe not super high, but higher than the government. But we also know that there is limited knowledge about it. So people in the streets know very little about what central banks do and so on. So yeah. So so my VoxEU blog, which is in the references, elaborates a lot on that. So there are many surveys asking people what do you know about inflation, about central banks, and you get answers all over the place. Very, 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 very unstable and very vague. Yeah. So you can always, I mean, even my close family relatives have very, I mean, despite the fact that I've been working at the central bank for years, they have no idea what the central bank does. So this, but actually, so you can put a positive spin to it by saying that this is rational inattention. So rational inattention means that you don't pay attention to something and it's rational to do that. Okay, there is a large literature on rational inattention in economics. Can you give me another example of rational inattention in your lives or in the world and so on?
Doctors.
Sorry, doctors, yeah?
Yeah, I don't know, perhaps.
But in which sense?
When you go to a doctor, you trust what he says and you have no idea what he's saying.
Yeah, exactly. That type of mechanism, exactly. So you more or less trust what they do, and you don't pay attention. So when you pay attention is when you don't trust. No. So before going to a doctor, you search in the internet, about then it's already kind of show a lack of trust. No. Yeah. So this rational inattention has been there. Is also, in a sense, we want rational attention to inflation in particular. So, for example, the fact that now everybody speaks about inflation, it's not good. It's yeah. So in a sense, I mean, so one objective of central banks, in a sense, is that people don't speak about inflation. So if inflation is perceived to be basically zero or low and under control, people simply forget about it in their lives. They go on with their lives, with their business, and they don't care about inflation. So when inflation becomes a concern, then in a sense central banks have already lost. So the question is, so we had this rational inattention equilibrium. People didn't care, but they didn't need to care because inflation was low and stable. Yeah. So that's a bit this kind of this nirvana situation. But then the question now is, of course, we have seen global financial crisis. Now we are seeing inflation. So the question always comes back. So will central banks disappear? So are central banks there to stay in the long term? And this is a debate which is especially alive in the U.S. I mean, the U.S. has a very federalist tradition. And there are many people who doubt about all central authorities, I would say, and including the central bank, the Federal Reserve. The U.S. also had the central bank later than other countries. So most European countries had the central bank already in the 19th century. But in the U.S., it was only until 1913 that the Federal Reserve was created. So it's basically only a century that the U.S. has a central bank. Yeah, and there are many countries without them. Even Canada didn't have one until 1935. So and on top of that, we have a system of fiat money, so not anchored to gold, only from the early 70s. So it's only 50 years essentially that we had this system. Okay. So for most of the history of the world, we had either didn't have central banks or we had central banks which were constrained by some kind of external anchor like gold or silver. Okay, so this is just to say that we should not take central banks for given. So they came, they existed, but they can also disappear. Yeah, so they are not given by God, or or they are not a state of nature. So then, okay, then we can go back to the question of Friedrich Hayek. So the so-called knowledge problem. So this was a libertarian point of view, saying a central planner, any central government, does not have all the information needed to decide on economic allocations. No? And this is true for many central planners or government actors. And this point was that this applies also to the central bank. So why should the central bank, as a central planner, be better than other central planners? So the central bank decides on the interest rates, determines inflation, but what does it know more than private citizens about the economy? And so why don't we let different forms of money compete and in a market setting, and the best one will prevail. So this is the idea of currency competition. So you have n different possible currencies. Let the public decide what the best form of money. It should not be a legal monopoly, of the government-backed fiat money, but we should sense from competition. So this kind of resonates with the current situation of digital currencies arising. So it has already been noted by many that this view of Hayek as problems. So there are several problems. So. And I noted already, so in the 70s, already free market economists like Milton Friedman were skeptical about Hayek's theory. So the criticism to Hayek also comes from kind of free market economists as well. By the way, I'm a big fan of Hayek for other reasons. So I think he's a Nobel. He won the Nobel Prize in economics, and his Nobel lecture is fantastic. It's one of the best pieces ever written, I think. So I don't want to downplay Hayek, who is a genius, but it was a genius. But this theory has some problems. So. So the first one is that money is, as we have seen repeatedly, tends to be a national monopoly. Okay, so it's exactly because of network externalities. So this is exactly the situation where competition doesn't really work. So if you have free competition, there's always a monopolist arising. And we see that at the international level. So internationally, there is currency competition. So for an international transaction, you can use any currency you want. Okay, so in theory, there is this competition, international level. But what is the result of this competition? Essentially, that we have only one currency, which is the US dollar. So the biggest currency wins, and almost all international transactions are run in dollars. Okay, so you already see at international level that there is no real competition, there is a monopolist. Okay, so the criticism of this theory says this currency competition leads naturally to a monopoly situation. The second criticism is the public good nature of money. So money, to some extent, is a public good like national defense or protection of the environment and so on. And it does not lend itself easily to competition. So we have already seen that the market is not good with public goods. The market looks at private returns, but does not look at public goods or positive externalities. A third criticism, which was also mentioned by Friedman, I think, is that so the idea that there is a legal monopoly on money is not completely true. So already now you can use other forms of money. It's not forbidden. Okay, even though other people say it's true, but on the other hand, if the state is paid, so taxes are to be paid. In the legal tender, that already gives a big advantage to that currency. So in other words, if you cannot pay taxes in Bitcoin, so Bitcoin cannot compete with the euro. So you have to pay taxes in euro, not even in dollars. And so this already gives a big advantage to the euro in Europe or to the dollar in the US and so on. But in many countries, other forms of money are not banned. So you can use, so in theory, if you and I decide to make a transaction in dollars, we can do it. Okay, so if the dollar is superior, we could decide to transact in dollars. okay, domestically. But this happens only internationally, but not domestically. So domestically, there is a high prevalence of the national currency. So in a sense, this idea of competition is also not there, because it would already be possible to compete. Other criticism is high persistence of monetary standards. So what we have seen in history is that whenever you have a form of money, you had to do something really terrible for people to change it. So historically, we have seen that people change, kind of the currency in which they make payments and they use, only if there is say very high inflation or hyperinflation and so on. Then they switch to another currency. But you really had to mismanage badly for people to. So there is a lot of entrenched habits in what people do. And you really need a big problem for people to move to another. So in a sense, so there could be credible currency competition if the current system worked really badly. Okay, so if the current system led to high inflation, unpredictable inflation, and so on, then there will be a window of opportunity for other competitors. But with the current system, with inflation low, well, not right now, but generally low and stable, there is a lot of persistence. So people will not switch easily to another system. And then there are switching costs, also records. So that's another important point. So if past transactions are done in a certain currency, it's not easy from now on start in another currency, because many things are repeated. So for example, if you have a constant payment in a certain currency, then you have to convert this in another currency. So if I always pay you in euro, we have to redefine, and then I make a monthly payment. Then if the whole country switches to dollars, we have to redefine all these contracts in dollars, and this is cost at least in the short term. So there are also switching costs in because many contracts have some form of money written in the contracts. So many contracts are written, say, I will pay X euros, if you do that, and my rent is X euros, and so you need to convert these into dollars, and you have to change all the contracts. Okay, so these are all the problems with the high exterior of currency competition. But so keep in mind, and this is also part of my blog article. So there is a risk of no innovation in money if it is entirely in the hands of the government. Okay, so the government is not good at innovating, that we know. So if we leave money entirely in the hands of the government, there is a risk of stagnation or no innovation. Okay, so so there may be reasons why money is state provided, and there is only one form of money provided by the state. But just be aware that the government is not good in innovation. Okay, so we risk remaining always in the same setting, no progress and no innovation. Any questions on this? Okay. So the question now arises, so now we see these digital currencies, so is this a vindication of Hayek? So some people say that. So I would say, so most likely not Bitcoin. So it won't be Bitcoin competing probably with existing fiat money. There are several reasons for that. First of all, Bitcoin has no monetary policy. So it's good that it has some mechanism of fixed supply, so this keeps the price high in the long term. But there is no monetary policy. So one reason why gold was abandoned as an anchor is precisely because there is no monetary policy possible with gold. So there is more or less a fixed supply of gold, and we have seen already with the gold standard that a fixed supply is not enough to provide stability. You need monetary policies. You need adaptation of the money supply to demand. Okay, you need a mechanism which matches supply and demand, which is called monetary policy, and we don't have monetary policy with Bitcoin. So that's one key reason. The second reason is that we know the environmental cost of Bitcoin. Maybe they may be overcome. Proof of work may be replaced by other mechanisms, but we know that is wasteful. And also the switching costs are huge, of course. I mean, if you want to redenominate all contracts from euro to Bitcoin is a huge task. Okay, so Bitcoin most likely not, but better currency may arise. So if this is in the hands of the private sector and there are profits to be reaped, you can be sure there will be innovation, and there will be attempts and creating better private currencies. However, it's important now. I think there is more or less a consensus now that the blockchain technology has more merits, more potential, and some people say, in general, digital currencies should not be dismissed. So people are starting to say, don't equate digital currency with Bitcoin, but it has some merit beyond that. I mean, here I have an article which I read just yesterday, which says DeFi, so the decentralized finance is real, whatever happens to cryptocurrency. It speaks about tokenizing financial assets, so converting financial assets into token. Remember, token is something that can be used online without knowing who you are. So tokenizing financial assets means that you can have financial assets as just having this digital token, you can show that you have a financial asset. And this article says you don't have to rely on auditors. And basically, so to prove that I have an asset, I don't. So if this is credible, so that if I have the token, I don't need to show to auditors and so on that that I have this asset. Yeah. So there is. I mean, there are many articles. I've seen many articles saying more or less this, that the the decentralized finance and blockchain technology have potential, and some people say this is where the government should put some effort to develop those to make it more credible rather than introducing CBDC. So some people say it's wrong to introduce a CBDC, what the government should do is to facilitate decentralized finance. But here, so my conclusion on this discussion would be that, so Bitcoin not, but I've not seen any impossibility theorem. So there is nothing in the law of economics that prevents a smart private designer to outcompete central banks. So I've not seen anybody claiming that is impossible. So I think it remains possible that somebody somewhere will come up with a concept that will outcompete fiat money. So I can say, of course, how likely it is, but I've not seen any paper claiming that there is an impossibility theorem that this cannot be done. So it is within the law of physics and the law of economics. So it might sooner or later happen. And anyway, as argued before, competition is good for central banks. I think central banks need to be this stimulus of competition, because otherwise, I mean, as I said before, government monopoly tends to be not very innovative. Okay, so you need a bit of kind of pressure. Yeah. Any questions? I mean, on Bitcoin, we already seen that it's not really used in transactions. So it's used more on the blockchain itself, or as a speculative asset, as an investment asset. And countries that have tried to introduce it as a legal tender, like El Salvador, have big trouble. So people don't use it. So. Okay, another in terms of innovative currencies, one concept which I believe should be given more attention, and I think it will come back. I mean, it is an old issue, but I think it will come back. Is the idea of self-correcting mechanism. So this is there was an older paper by Greenfield Yeager, 1983, which basically said, suppose that the consumption bundle is the monetary standard. So these are all mechanisms to stabilize the price of a certain money. But what if the money is itself defined? The value of the money is itself defined by a consumption basket. Okay, so in this sense, the price is automatically one all the time, because this is what defines the monetary standard. Okay, so you take a broad basket of consumption, goods and services, And then you say this monetary standard is always convertible one-to-one with this basket. So in a sense, again, the price level is 1. So this is a unit of account, if you want, that is self-stabilizing. And so this is an interesting idea, of course, because it would completely do away with inflation. So inflation would be 0 all the time, by definition. And some people claim that this would be feasible already for central banks. I mean, in principle, if you have a self-correcting mechanism like that, what you need to have is this is the difficulty of it, is that you need, in order to convert this, you need to have a reserve based on this consumption bundle. So if I'm an intermediary, so if I'm, say, even a central bank, and I want to offer this self-correcting mechanism, I need to have on my asset side the consumption bundle, because I have to be able to convert my liability into an asset that is defined in terms of the consumption bundle. So this is exactly the problem, because of course it's not easy to hold a physical consumption bundle. So what does it mean that you hold a car, a house? It's not easy, no? Because it's a physical asset. And not to speak of services. I mean, you have travels, airline tickets, whatever is in the consumption bundle. So that's why it's difficult. But this actually is not whole, but the whole and rise. Sorry. Yeah, it's whole and rise. Sorry, not whole, but whole and rise. So whole and rise, 2016, they showed that this would be feasible by using central bank reserves. And to be honest, I don't remember exactly how they showed that. But this is, I think, is an interesting idea. And then there were some attempts already in the past. For example, in Chile. So in Chile had one concept called unidad de fomento, which is I don't know if anybody speaks Spanish. So what does fomento mean? No?
I don't know how to.
Unidad de fomento.
I don't know how to translate it.
Okay. Yeah, I think it was called that way because I saw a lecture on it.
But I don't know, banks and sort of things that from the government are called that way.
Okay.
Like Banco de Fomento, it's something that's similar, I would say.
Okay. Because I mean, this Unidad de Fomento, I think it was also a unit of account that was always convertible one-to-one. So always have a price of 1, so at 0 inflation by definition. And it was used in Chile in some contrast with the government. Yeah, because I saw a lecture on it by who was doing this. I mean, basically the idea was that sometimes indexation, price indexation doesn't work, and this person was saying. Sometimes there is an indication in the law about a certain monetary amount, which is not updated. So it was making the example: if you are found guilty in the U.S., in some U.S. states, you are given a prison term. Then you can bail yourself out of prison. And sometimes the bail is ridiculous because the price in dollars was not updated since 1880. So they can say you can go 3 months to prison or pay $5. No? So now it's ridiculous, of course, but these were the $5 on 1880. So many laws. So because this is written in a law, it's not easy. You have to update the law to update the amount, and sometimes the law have not been updated since a long time. So there is sometimes a question of updating laws, and apparently this Unidad de Fomento in Chile was also addressing that. So because this has always a price of 1, then any laws written in this Unidad de Fomento would be automatically indexed to changes in the price level.
So it doesn't matter what you choose to base the index, like which product, to which,
The consumption bundle.
yeah.
Yeah, of course, it matters a lot, of course. But you can say, but already the CPI is based on a consumption bundle. So when you have the CPI, then of course that translated. So if you don't trust the government, then the question translates on, will the government cheat in terms of the consumption bundle? Because of course the statistical agency can always manipulate the consumption bundle and actually some countries do that, to manipulate inflation. So if you don't trust the statistical agency doing the calculation, then you also don't trust that this unit of account is really self-stabilizing. So that's can also be the case. So you have to trust that the unit account is self-stabilizing and that the consumption bundle is representative. If the consumption bundle is not representative, then the real unit of account is not self-stabilizing. So that's another practical problem. You have to define the right consumption bundle, which is, of course, changes over time as well. You have to update it because, after Corona, people don't do some things anymore, or they do more other things. So the consumption bundle has changed. So you have to update it every year, or you have to update it continuously. And how you update it is, can be subject to manipulation. But in general, I see some future in this self-correcting. So if somebody can come up with a unit of account that is credibly self-stabilizing, I think it would be a really great idea. What is important is also that these may imply separating unit of account and means of payment, at least if physical cash is kept. So it would be very hard to have this unit of account expressed as physical cash, because it's cash as it's very hard to change the value of cash, for the reasons we discussed. So it's not easy to it will not be easy to translate this unit of account into cash. There will probably be an exchange rate between this unit of account and cash, which was the case also in this Chile example, I think. So there will be a fluctuation of exchange rate. So either physical cash disappears and it's all digital, and if it is digital, it can be done. But if it's not digital, then if it is still in terms of physical cash, then it's not it's not straightforward. Because it would be hard to write a physical banknote saying, this gives you a right to a consumption bundle. It's normally physical cash is written in terms of euro, in terms of a nominal value. Okay, so what would I see, or what could we see, I don't know, as an ideal form of money? Suppose that we were kind of doing a list of what we want to have in 2050, for example. 30 years from now. So what do we want as an ideal form of money? I guess that we would all agree that it would probably be digital. I mean, we are anyway trying to digitalize the economy, so we want the economy more digital, more green. Okay, so we don't want wasteful paper. So that we all agree. We will probably all agree that it has to be safe. So what we would want is that this is widely used with bank and non-bank platforms. So there are network externalities. And we will want also high speed of payments. Okay, so we want this to be a good means of payment in terms of being high speed. I mean, at the same time, we will also have low rents, so low cost. I mean, a credit card is a very convenient way of paying, but it's costly. I mean, you have to pay a high fee to use a credit card. And we also we want to have data privacy, so we don't want this provider of money to sell our data for commercial purposes, or sell our data to the police or the state authorities. So we would like this form of money to be stable in terms of a broad consumption basket. Probably even self-stabilized. That would be the ideal. So the unit of account has adjusted itself. And we would like to have some operational resilience. So we would not like this form of money to disappear if there is a blackout, for example. Okay? So we need something to back up probably, and this can only be physical cash. So this puts a bit of constraint to what we can do in terms of monetary standard, because if we have a form of money that is entirely digital. This probably cannot work 100%, because we always need something that doesn't require electricity or doesn't require internet access as a backup. And because of the limitations of what you can do with a piece of paper, this will be always a bit of a problematic aspect. Okay, so to be aware that you cannot digitalize everything. Yeah.
Considering the environmental aspect, is digital money really better than the paper money that we have? Because we've talked a lot on blockchain technology that is very bad for the environment.
Yeah, no, you're right. Yeah, exactly. That's another. Probably we should add that to the list of. So we should add also the constraint that is environmentally friendly. Yeah, exactly. So Bitcoin would not be. Yeah, I would probably add. You're right. You probably add to the list of desirable characteristics. Anything else that I'm missing? I mean, what you would see as a desirable form of money in the future? I mean, some of these. The problem is that some of these characteristics are in contrast with each other. So you have to manage trade-offs. As always in economics. So, for example, probably there is a trade-off between safe and also low rents, because low rents creates. This is what we have seen before. So low rents doesn't give incentives to those who manage the transaction ledgers to have to have reliable records. But at the same time, so therefore it's going to be less safe. So if you want to give entry to everybody and it's a completely decentralized and democratic system, then there may be a lot of fraud, a lot of false transactions, and so on. So how do we square the two is difficult. So it's a trade-off. So we have seen that proof of work is wasteful. We may invent other ways, but it's not obvious what these ways would be. So the question is, what kind of trade-offs we have, among these possible characteristics. I see operational resilience as already something that constrains choices quite a bit. So because we know that countries can experience blackouts. There have been huge blackouts in many countries. I think in India there was a blackout which left, I think, half of the country without electricity for days, maybe. Or so we cannot rely entirely on something that runs on the internet. Not to speak that the internet is also restricted in many countries as well. Yeah. For example, you cannot use Google in China. So already everything which is provided by Google doesn't work in China, for example. Yeah. Any other views or questions? Yeah, so these are the references. So I recommend the Jean-Pierre Landau article. It's only 2 or 3 pages. So you can read it quickly, and it basically says so don't throw away everything with Bitcoin. There is a potential in digital currencies, especially in the decentralized finance. A lot of potential there. If we can solve these problems of verification and so on that basically free entry creates. Of course, I would recommend my blog, which is also about the future of money and so on. It's a couple of years old, but at least the issues are still there. If you want a more kind of older but still interesting article, is the one of this self-stabilizing mechanism. It's a bit more theoretical, but you understand a bit better what they mean. Okay, so any further questions on this lecture? Otherwise, we can spend a bit of time on the exam. I guess you are interested in that. let me put it a bit bigger.
That one down right.
You mean this one? This one? No.
And the top one.
Bottom right. Focus? No.
No, right.
Wait, this?
This
This one. Okay. No, okay. That's too much. Okay. A little bit more. Okay, so the first part, of course, this of course is a dummy, will not be in the exam. That's obvious. Okay. So what I thought of doing is this. So first of all, remember the exam is the 20th of July. Okay. So I thought that first of all that I will give you 8 questions, and of these you have to address at least 5. Okay, it means that you can also address all 8 of them. I don't recommend it because you probably don't have time to do it well. But if you answer 6, I will probably consider the best 5 in the grade. That's the idea. So then it says, please address the question in a direct and concise way, going straight to the point without elaborating on extraneous elements. So here it says basically, so answer the question and don't go somewhere else. Because this I notice that sometimes students do. So sometimes they don't know the answer exactly and they start to elaborate on something else. So please don't do that, because I will assess whether you have answered that question in particular, not if you know something else about the topic. Okay. So your answer will be evaluated according to the content. Of course, the most important thing is content, so that the content is right, that you write something that is correct. The structural layout. So if you write me something which is one piece there, and it's not clear what counts after which, is also not good. So something which is a clear structure. Maybe you want to put subtitles or things like that, or underline sections and so on, is desirable. Layout. So please try to also to draft as clearly as possible. I know that some of you is not easy, but of course, if I cannot read what you write, it's really hard for me to give a good grade. And third, also quality of the drafting. Some people said, what if I'm not an English native speaker. Yes, no, I understand. So I don't look for Oxford English necessarily, but if you don't put, for example, articles, I have to get off some of the grades. Okay, so put the articles and so on. Okay. Yeah. So I won't obsess on a small grammatical error, but if he reads like, I don't know, a strange thing, a pidgin English, I will probably take off some of the grade. Okay. So you have 90 minutes to finish the test. So basically, so divide the time well. So if you have 90 minutes, means that is about 15 minutes per question. Okay, more or less. That you have a little bit of time at the end to review. Okay. So the questions are a bit. We try to, I try to link different elements. So the questions are not really about a single lecture, but always try to span different lectures a bit to be able to show if you are able to make links, no? And so, for example, you should say, assume you are a regulator in charge of defining a framework for regulating cryptocurrencies. So here already tells you that it's cryptocurrency. We are not speaking about CBDC here. We're speaking about cryptocurrencies, okay? The way I define, no, which is basically something that has no issuer. What elements would you consider? Would international cooperation be needed, and why? No, so what you can do? Tell me yourself. What would you write here? On international cooperation, what is the reason why international cooperation is needed? Yeah.
Because otherwise people could, I don't know the word for it, but have incentives to switch, and then they have positive effects from that.
Yeah. Does anybody remember how this is called? This we discussed in the course. You know, this is called regulatory arbitrage. No, this we discussed. No, so there is a risk of regulatory arbitrage. So negative externalities from activity going outside and so on. But remember, we also discussed, you know, what are the pros and cons of international cooperation. So we said, if you have same preferences, then it's easier to have international cooperation. But if you have different preferences across countries, then international cooperation is harder. Okay. So, for example, if the approach to privacy is different, then is international cooperation is less desirable. So I would expect you to put some of these elements under this part. Okay, and what main elements should you consider? So what is, I mean, here you should say something about the rationale of regulation. So why we need to regulate crypto? So we had a slide on that, actually. Remember, in the election regulation, we had a slide on this. So what are the reasons why you should consider regulation? For example, preventing fraud and so on. So the environmental aspect also, maybe, you know, the negative environmental externalities. But again, we had a slide exactly on this. We also had, remember, you also had a slide saying there are elements that you should consider in regulation, saying avoid cliff effects, and so on. So in this part, you can also say the main reasons why we want to regulate cryptocurrency is this, and then in doing this regulation, a regulator should also consider, for example, avoiding cliff effects and so on. Okay, so this is really what was in the slides, and then international cooperation would be, you know, preventing regulatory arbitrage and manage this trade-off between externalities and heterogeneity in preferences. So as we also discussed in the lecture on regulation. Okay, so here, I mean, here also the cross-link, you know, between different lectures will be given by the fact that you define a cryptocurrency. So you could start by saying, you know, how we define a cryptocurrency, you know, and you say, and so you remember we had the lecture on taxonomy. So we had the lecture saying what are the different forms of digital currency, you know, what does it define? And so cryptocurrencies have these characteristics, they have no issuer, they are digital, they are distributed on decentralized systems. And so you can make a link to that lecture, and then you would say the rationale of regulation and why international cooperation is needed, and what are the limits to international cooperation. So that would be the ideal answer to that question. Of course, I mean, remember you have 15 minutes, so you can write, I don't know, half a page or something like that. Okay. So don't write, you know, a very long thing. So you have to write. But at the same time, please don't write keywords only. Because this is also what I've seen some students. I mean, when I told students in the past to be concise, some of them took this to the extreme to just put keywords. This I also don't want. So you have to put full sentences. I guess it's the same in other exams, I suppose. No? So put full sentences, but, you know, think about writing, you know, half a page to a page for each question. So no more than that, I would say. Okay, so you go straight to the point, and so on. So if you, for example, in this particular example, if you spend, you know, 1 page defining cryptocurrencies, this would be wrong. Okay, so I would expect you to say what a cryptocurrency is in 2 sentences. Okay, and then write 3-4 sentences for each of these questions. Okay, so what are the elements? 1, 2, 3, 4, and why international cooperation is needed? You know, preventing regulatory arbitrage, and then you can say, however, international cooperation is difficult, there may be heterogeneity in preferences, maybe the privacy example. Okay? I mean, as you can see, having followed the lectures and having seen the slides, all this is answerable. So there won't be anything that we are not covered extensively in the course. So everything that is there has been covered. Okay. Okay. Any question on the first question in how you should answer and so on? Is it clear more or less what is expected?
You mentioned about something about the articles that should we cite them or how?
It's better if you cite, but I would say it's not. I would not. So if you don't cite and the rest of the answer is correct, I will not get points off. But if you cite, it's better. Yeah.
Okay.
Yeah. Okay, so let's go to the second questions. So please define what the digital currency area is. What are the main costs and benefits for state authorities and citizens? Please illustrate in reference to at least one form of digital currency. So do you remember, we discussed what the digital currency area is? So you remember the issue? Digital currency area. So you remember we said, yeah.
I would say everywhere where one specific digital currency is used, because it's limited
yeah.
to one
Yeah.
traditional state boundary.
Yeah, exactly. So exactly, that's the point. So basically, the use of a certain digital currency may travel across state boundaries, unlike other forms of money. And remember, people can be grouped according to characteristics other than nationality or being a citizen of a certain country. So, for example, whether you are a Facebook user or not, or whether you are a member of blockchain or not. Okay, so the digital currency area is where this current digital currency is used, which can where the cut is not by state borders, but is by your group of reference. Can be whether you use a certain platform, or it can be your social connections, or social media use. Can be anything other than state boundaries. So what are the main costs and benefits for state authorities and citizens? I mean, so you would start by defining what it is, no? So please define. So the first sentences should be 2-3 sentences define what it is. Then what are the main costs and benefits for state authorities and citizens? So basically for state authorities, a loss of control, because you don't control that. And of course the potential benefit for citizens is to escape the state control, of course, to have something that puts you above the control of the state authorities. I don't know if there is anything else that we can put here. Main cost and benefits of state authorities and citizens. Yeah, so we would say that basically you could also write here that traditional currencies and also potentially CBDC, so state-backed fiat money still tends to operate across within state borders, but of course they can also be used in other countries, and that is the dollarization concept. So if another country uses so it's not entirely true that the traditional currencies are only used in a certain state, and dollarization has some cost as well. Yeah.
There's also one benefit for the citizens that it's easier to use the digital currency for illegal reasons if there is no control for the state.
Yeah. Yeah.
And
Yeah.
it's also a cost for the state.
Yeah. Yeah. Exactly, you can use for financing terrorism or for any legal purpose. Exactly. Yeah, that's part. I would say it's part of the loss of state control, which also implies exactly this. One other benefit of citizens, and here you can make a link to the lecture on payments, would be also that remember international payments may be easier because you escape these compliance costs. So if you have to make a cross-border payment, it's easier in a digital currency area. So if you need to send money to India and you are both Facebook users, it may be easier than in a traditional way where you had to go through this correspondent banking and all the compliance checks. Remember we discussed about how difficult it is sometimes to have international payments, remittances, and so on. Okay, so I think here you can mention this as a benefit for citizens potentially. Okay, so please illustrate in reference to at least one form of digital currency. So here, what I would pick here probably stable coins. I would say stable coins are often, associated with some kind of transnational company. I mean, the Libra project was associated with Facebook, for example. But you can pick other forms of. I mean, you can even pick here CBDC. But here for CBDC, I would say it has to be seen how much cross-border use will be allowed, and on which platforms also will be allowed. So it will be crucial whether CBDC will be allowed in platforms that basically travel across state borders. So, for example, the Chinese renminbi so far doesn't seem to be really that different from a traditional renminbi, because it's going to be used within the Chinese border and distributed by a network of banks. So you could argue in that case that would not be, so the digital currency area in that case would be very much similar to the state currency area. Yeah.
But the question reads that all the questions before should be illustrated by one form of digital currency. So for stablecoin, there's no.
Yeah, so I would say, so the first part is define what it is, no? And then you can do in 2-3 sentences. And then you can say, these are the main costs and benefits. And for example, you can say, so if you can find an example where all the costs and benefits that you illustrate are shown better, but even if you have just an example. So I would say, if you say, these are the main costs, for example, one example of these costs can be illustrated by looking at stable coins. Then, that would be also okay. Yeah. I mean, also, the more you can show that you can also jump from one lecture to the other, the better. Now, what I want to avoid is that you memorize things in the order they were presented without being able to make links. So for me, also the ability to link different things is a plus. Okay, so you remember something in a lecture, you link to something which is done in another lecture. Many of the topics are connected, of course. So we divided this into lectures. So we had 10 lectures, but what is in lecture 5 is related to what you have in lecture 8, and so on. And the more you can do these connections, the better. I think so if you can have a kind of a hook on another lecture is desirable. So also here, I mean, in terms of size, I would say, in this question, I would say maybe 2 sentences for the first part, maybe 3-4 sentences on this, and another 2 sentences. So again, overall, I would say in half a page, you should be able to answer this question. So half a page to a page, maybe, but don't, for example, don't go in this. So if you use a stablecoin example here, don't lose, half a page to describe what a stablecoin is. That's not needed here, no? So you are asked to illustrate this point in reference to one form. So you don't need to define a stablecoin in detail here, for example. So just follow really what the question is. Yeah. So there are 8 actually of these things in the real exam. So the first part of the exam is exactly the same as you will see in the exam. Okay. The question is not, of course, no. But so there are 8 of them. You can pick 5. Please write what question you are answering. No, it's not obvious. Okay, so if you are answering question number 5, write 5, and then do the answer. Okay, don't put things and say with an arrow saying see next page, and then you go back and it's not clear if it is 5 or 6. I speak by experience. So please be structured. No structure. So it's 5. This is what I write. 6 is what I write. And if you have different parts, don't hesitate to put subsections. Say, for example, in this question, we say, what the digital currency area, underline, and then you have 2 sentences on this. Then main concept benefits, you underline, and then a couple of sentences on this. So don't be afraid to also substructure your answer in that way, no? Because it's also easier for me to see what you are doing. Okay. So, but this is very important for your life, no? For your future professional life. So being structured is very, very important. So good. Anything else on the exam? can you tell me when you need correction? So, when do you need the result to be happy with your, I don't know, enrollment or things like that? You don't know?
Doesn't matter really.
No.
Because there is a very practical question that I will be in Italy until late August. So I will be able to pick up the exams only in late August. And I don't know if this is a problem. I have to check with the university. But you don't have a deadline for enrollment?
The examination office, but not with us.
Okay.
So there are some regulations from the examination office until when the stuff has to be graded. But I think for us,
Okay.
really,
Okay, then I have to negotiate with them because I have to yeah.
And you said that's the first part of the exam and then there's a second part, or is that the first part that we
No. This
Just
is
the 8 questions.
it's just 8 questions exactly. Just 8 questions. You have to answer at least 5. I mean, if you answer more, the better. But focus on answering 5 well. So in the real exam, basically there is start of the test. Then this part will be there. Then there will be 8 of them, and then there is end of the test. That's it. Okay. So focus on do it well. And I think in 90 minutes you have time to do it well. I think so. It's I think 15 minutes per question. If you know what you're talking about, if 15 minutes per question is okay. I think in this. I think I computed that a smart person must be able to do each of these in 15 minutes. So I guess it's it should be okay. Any other question on the course, on anything else?
Do we have 2 side articles in our answer?
Say it again.
Do we have 2 side articles?
Yeah, this was already asked. I don't consider it necessary. It's a plus if you do it, but if the rest of the answer is perfect, I will not take away points you don't cite articles. But if you cite them, it's a plus. Okay. Yeah. Yeah.
I did have 2 questions on regulatory, so regulating big techs. And there was one point in the lecture that stated that the antitrust is difficult for big techs. Is it because they are so big that basically regulating them would not really have an effect on them?
Well, say it again. This is trust. What is the problem with trust in big tech?
Well, is it that because big techs are so big, anti-competitive practices might not have a big effect on them?
Yeah, so antitrust is always an issue because they are super big and super dominant in their field. So yeah, they are very influential, very complex. I mean, if they also enter into the financial sphere, they have a financial and non-financial part, and the 2 parts may interact with each other. So if, for example, suppose that I don't know. Apple takes a very large role in financial services. The problem for a financial regulator will be that Apple has a lot of non-financial activities can impinge on the financial part of Apple. So Apple is a huge company, is a huge firm. And it's of course dominant in many fields. So it's both. I would say it's both a question of antitrust. It's difficult to do antitrust for such a dominant and conglomerate, but it's also specifically the fact that they have these firms, unlike financial firms, they have an important non-financial part. So if they have problems in the non-financial part, it may spill over into the financial part, which banks and other financial intermediaries don't have. Okay, so but I mean this paper on economic policy that I mentioned has some statistics on how big they are, and it shows that they are much bigger than even the biggest banks. So Apple is much bigger than I think the biggest bank in the world is probably, and there must be some American bank or Chinese, I'm not sure. But obviously they show that firms like Apple or Google are a multiple of those banks. Yeah, in terms of market capitalization in particular. I mean, the market capitalization of a firm like Apple is bigger than the GDP of many countries. Okay. Other questions? So why don't we remain like this? That so you can email me. I guess you can email it through the university. No, I don't think you can email me directly. I never get emails from you directly, but I think you can email through the.
I wrote you an email, but you didn't answer, so I guess you won't get it.
So you wrote me an email and you didn't get an answer.
Yeah, at the stacho@econ.ui
When was it?
a month ago.
Sorry for that, because normally I'm, one assistant in the office forwards me the email of the students, so I don't get the email directly. So I'll check if I'm missing emails. But I mean, you can write to me in that way. You can also, apart of my email is actually online. If you actually look for it, you can write me an email directly even. And also, I guess you can also write to me in OLAT. That I'm not sure. But anyway, so my email is online. If you can also write me directly. And so you let me know if you want another Q&A lecture next week. It would be on Zoom, not physical. But so I'm in your hands if you need that, no? And or email me. So don't hesitate. Okay. Good. Then I thank you for following this course, for your participation. So hope it was useful.